They don't want you to know this, but I'm going to tell you anyway. The global economic collapse is accelerating, and it's happening faster than they'll admit. Skyrocketing debt, market volatility, and geopolitical tensions are pushing us all to the brink. But these aren't just isolated events. These are interconnected cracks between the US, China, and Europe, which could bring down the entire global economy. But just how close are we to the brink? What are the three driving forces of this collapse? And most importantly, what can you do to protect yourself and your family? Let's get into it. The first and most critical driving force is global debt. Public government debt has now exceeded $100 trillion, or nearly 100% of global GDP, meaning that there is now as much government debt as there is total economic output on the entire planet. Now, it doesn't take a genius to tell you that this is unsustainable. While our governments continue to push off this crisis, we are simultaneously careening faster and faster towards one. And when this crisis hits, there will be no resources left, nothing available to help those who lose everything. Even the Bank for International Settlements, the BIS, or the Central Bank of Central Banks recently issued a stark warning. Government debt trajectories represent the most serious threat to macroeconomic and financial stability longer term. But we already knew this. In China, debt levels are skyrocketing because the government is injecting funds into failing sectors like real estate to create artificial growth, a short-term solution for a long-term problem. Sound familiar? In France, fighting over the budget and runaway spending has gotten so bad that last month, their government collapsed after a historic no-confidence vote that removed those in power and created extreme political turmoil. But what about here in the United States? Well, as the world becomes more interconnected, those issues become our threats too. But let's not forget our own spending that is so out of control that the interest payments alone are now one of our largest line items, rivaling that of our entire defense budget spending. But what consequences does that have for us? Well, I don't have to tell you the pain of inflation and losing the value of your dollar, but what happens if that inflation got even worse? As our debt continues to climb and as our debt becomes more unsustainable, major credit rating agencies like Fitch and Moody's have actually downgraded the United States credit rating, meaning that there is less faith in the United States' ability to repay its debt. And for those of you out there saying the United States will never default, the dollar will never be worth zero, no, but what happens if the dollar is worth 70, 80, 90% less than what it is today? I would bet that that would not be something you would want to experience. And all of this debt brings us right into the second driving force, market volatility and the illusion of growth. For the last few years, we have been told that the stock market is the economy, which it's not. Record highs, booming corporate profits, and trillion-dollar tech companies have been held up as proof that everything is fine. But let me ask you, what happens when the growth is merely speculation? Speculation that can be wiped out in an instant. There is a reason that everyday Americans have been left scratching their heads wondering how it is that everything is going so well when they feel as though they are in a recession. The truth? The economic boom that we've been sold is nothing more than a mirage built on the back of cheap debt and government overspending. Did you know that the top 3 tech giants now account for 21% of the S&P 500? But that's not all, it gets worse. The top 10 companies account for 40% of the S&P 500. That market concentration is up 14% from the peak of the 2000 dot-com bubble right before the crash. That is not real growth. That is dangerous market concentration, because if even one or two of these companies were to fail, it could trigger a crash all on its own, and the entire market should never be based off of one or two companies. In fact, the last time we saw this much concentration was in the 1970s, right before the Dow lost half of its value from 73 to 74. But the difference is that this time globalization is so much stronger. The synchronization of global financial markets is unlike anything we've seen before. But what do I mean by this? Well, our economy today is deeply integrated with stock markets worldwide, meaning if there was a crisis in China or Europe, those shockwaves could be felt here almost immediately. This is something, if you remember, we got a small taste of a couple of months ago with the Japanese yen carry traders, but that was just a small taste. Imagine if this debt crisis that's plaguing all of these different countries were to come to a head, we could see prices tank overnight. But market volatility isn't just about stock prices, it's about confidence. And confidence can be fickle, meaning that the second the illusion cracks, panic sets in. We've seen this before. We saw it in 2008, only today it would happen on a much larger scale, meaning that the consequences will be greater. But there's one more driving force that is accelerating this crisis, and that is global geopolitical tensions. Global stability is the invisible glue holding the financial system together. But that glue is cracking and cracking fast. And no, I'm not just talking about the ongoing war in the Middle East or Russia and Ukraine. I am saying that global tensions are escalating and multiplying everywhere, threatening trade agreements, energy flows, supply chains, all threatening the illusion of stability that has been built. But I'm not just talking about physical wars either. I'm talking about silent wars as well, such as the BRICS bloc alliance war on the US dollar. After decades of weaponization of the US dollar, these countries have finally banded together, saying enough is enough and are laser focused on de-dollarization, or diminishing the dollar's strength and ultimately unseating it, dethroning it as the global reserve currency. Should the dollar lose this status, the impact would be almost unthinkable. It would be devastating. Every dollar printed today relies on demand for that dollar, relies on the fact that it is the world's reserve currency to keep its value stable. Without that demand, there is no stability. Prices for food and fuel and everything in between would skyrocket, meaning that everyone in the United States, their dollar would be worthless. But this isn't fear-mongering. This is a process that is already happening today. The world is moving away from the dollar. But as these three driving forces, unsustainable debt, market volatility, and geopolitical tensions continue to push us towards a crisis, most people remain completely unprepared. But what does this mean for you watching this all unfold? It means the time to act is now. The warning signs are no longer blinking, they are flashing red. And I hate to be the one to say it, but if you wait for everyone else to wake up, well, by that point, it's already too late. When the debt bomb detonates, when the market collapses, and when these geopolitical tensions destroy the dollars in your wallet, there will be no time left. The bad news, the hard truth, is that no one is coming to save you. Not the government, not the Federal Reserve, and certainly not Wall Street. But there is good news. The good news is that there is still time to protect yourself, to safeguard your wealth, and to secure your and your family's financial future. We help people prepare for what's coming next, both by spreading education and helping people take action by getting a strategy in place. If you want to learn what we can do for you, how we can help you, call us at the number below or click the Calendly link in the description to set up a free appointment with one of our expert analysts so that you too can have a strategy in place to protect yourself against what's coming next. And as always, I so appreciate you being here. Thank you so much. I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.